What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. In today's video, we're going to take a look at some of the biggest trades from the WSB forum over the past week, so we can learn from other traders' experiences. First off, we have user 10ragzeal, who is down 75%, or more than $14,000 on a volatility options play. He owns 200 contracts of puts on the UVIXI, with the $19 strike price expiring on September 22nd. Based on how much he paid for the puts, he has a break-even price of $18.08. UVIXI is an ETF that tracks the price of the VIX futures. When implied volatility goes up, the VIX usually goes up and vice versa. During market crashes, the VIX tends to increase a lot as the future market outlook is very uncertain. For example, during the COVID meltdown last March, UVIXI increased roughly tenfold. However, during normal times, its value decays very quickly. The OP noticed that since the beginning of this year, UVIXI would have occasional spikes where the price goes up for a few days only to give up those gains over the next few days. He thought he could make some quick profits by buying calls at the beginning of the spike and then converting his position into puts once he thought the spike had reached its top. He bought calls at the beginning of the most recent spike and closed the position for a profit. He then bought puts hoping for a reversal. Unfortunately, UVIXI has not decreased in value as fast as he had hoped. His puts have a strike price of $19 and a break-even price of $18.08. At the current price of $23.10, his puts are 18% out of the money and almost 22% away from the break-even price. He only has about a week left from expiry, so there's a high probability of a worthless expiry. He's now sitting on a 75% unrealized loss. Next off, we have user Nebula15, who is down 71%, or more than $21,000 over the past 3 months. He started off the year with $5,000 and got off to a pretty good start. He made some massive gains from GameStop calls during the short squeeze. He also bought calls on Microsoft, which has been one of the best performing stocks this year, increasing almost 40% year to date. But over the past few months, his luck has turned dramatically for the worse. He owns a $315 strike Microsoft call expiring September 24th. At Microsoft's current stock price of $300, this is only 5% out of the money. But with Microsoft's market cap above $2 trillion, its stock doesn't move much over short periods of time. With less than 2 weeks left till expiration, there's still a chance of it expiring in the money, albeit a slim chance. This is reflected in the price of the call, which is down 94% or $5,800 since he bought it. This is his single largest loss. His second biggest loser is Genius Brands. Genius Brands is a penny stock which creates animated kids shows. It experienced an apparent short squeeze in April of last year, with its stock price increasing 21-fold to $6. It has subsequently given back most of the gains, and now trades at $1.43. His $5 strike price is 250% out of the money, and he would need the stock to more than triple to cover the cost of his premium. This only seems plausible if the stock can have another short squeeze. He is currently down 93%, or more than $5,000 on that position. However, it doesn't expire till January of 2022, so there is still a few months left for a potential turnaround. His next position is $22.50 strike calls on IronNet. IronNet is a cybersecurity company which recently went public via a SPAC. Investors are very excited by the company, as the share price has more than doubled since the deal was announced. This is the only one of his current call positions which is in the money. Unfortunately, because the implied volatility was so high when he bought it, his break-even price of $24.50 is still above the current stock price. The calls expire this Friday, so they'll probably expire in the money. But because he paid so much in premium to buy the calls, he is sitting on a 32% or $1,600 unrealized loss. These failed call option plays, as well as a few others, resulted in his gut-wrenching 71% or almost $22,000 loss. Given the poor track record of the OP, some commenters say that they'd be interested in buying put options on his portfolio. If such an investment opportunity was available, even the OP would do it as well. But despite the disastrous performance of the past 3 months, it's worth remembering that he only started out with $5,000. At his current portfolio value of $8,888, he's still up 78% all time. We wish you luck on your future trades. Next off, we have user Over It All of It, who posted a picture of her account statement from 2001. The statement shows 2 separate orders, each selling 500 shares of Amazon.com stock on October 3, 2001. She sold the shares for an average price of $6.51 per share. In hindsight, those sell orders are some of the worst investment mistakes in history. Amazon was one of the darlings of the dot-com bubble, with its market cap reaching a peak of $30 billion at the time. But Amazon stock was viewed as highly speculative, as the company was still small and was burning cash. Even Jeff Bezos said there was no guarantee that they could be successful in the long term. At the peak of the bubble in 2000, Amazon stock exceeded $100 per share. But in 2001, it gave up almost all of those gains as the bubble burst. The OP bought her position about a month before she sold it at a cost basis of $12.50. All tech stocks were extremely volatile at the time, and it declined 50% over the next month. She got spooked and sold the entire position at $6.50. Had she held the position, it would have increased in value by more than 500-fold. Her position of 1,000 Amazon shares, which she bought for $12.50 each, would now be worth $3.4 million. In hindsight, she obviously should not have sold, but at the time, there was a significant probability that Amazon could go bankrupt, as did most of the dot-com bubble stocks. One commenter jokingly says, "You can't make much money selling books online. Such a dumb concept will never take off. Glad you got out before you lost it all." She eventually realized her mistake and started buying back the position at higher prices. It's currently her single largest holding, but her current ownership is much less than 1,000 shares that she sold. Despite the poorly timed Amazon sale, she has been able to accumulate a net worth in excess of $1 million through her salary and investing. This goes to show that if you have a long time horizon, you can achieve phenomenal investment results even if you make a few bad trades in the beginning. And there is one stock that she has held for the past 20 years. At around the same time she bought Amazon, she also bought cigarette company Altria. While this investment wasn't as good as Amazon, it's still been a 10-bagger even before you account for dividends. That's enough to classify as a win in our books. Next off, we have user X Factor, who's made a life-changing amount of money by YOLOing his life savings into a single Australian penny stock. The stock is Liontown Resources Limited, a small Australian company which mines lithium, gold, vanadium, and other valuable minerals. At the time, the OP was bullish on the EV industry. Instead of buying shares in EV stocks, he thought buying lithium miners would be a better bet. He did research on different countries and found that Australia was the global leader in mining. He then filtered all the lithium mining stocks and picked Liontown Resources as the best option based on their management team and other factors. He had no interest in making small amounts of money. He went all in with his entire life savings on this single stock, and to this day, it still makes up 100% of his portfolio allocation. He made the initial purchase in 2019 at a price of 8 cents per share. He's also added to the position every month as he deposits more money into the portfolio. At $1.58, the stock is now almost 19 times greater than his original cost basis. His portfolio has grown to $1.4 million, a truly life-changing amount of money. The OP says he hasn't told anyone in his personal life about his gains. He's worried that jealousy could ruin the few good relationships that he has in his life. Other commenters seem to agree with this sentiment. User Mavantic says that most poor people will stop talking to you after they ask you for money and you say no. Congratulations on the massive gains. Alright guys, that wraps it up for this video. What do you think about these trades? Let us know in the comments section below. If you enjoyed this content, make sure to hit the like button and subscribe so you don't miss future uploads. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.